So the question is, what's really been driving the economic sentiment? Well, we got tariffs and inflation, interest rates, the Fed, and Trump fighting the world. He's picked up a few fights with more people between yesterday and today, and we're going to cover all of that, how it's impacting stocks and the real estate market in today's video. Hope you enjoy. We got a lot to cover. Let's begin with Elon Musk. He's really been bashing Trump for this big, beautiful bill because of the amount of spending and increasing the deficit. Is very ironic considering this tweet that Elon Musk quoted with the 100 emoji from Trump back in July 31st of 2012. No member of Congress should be eligible for re-election if our country's budget is not balanced. Deficits not allowed. And Elon's really been taking stabs at Trump, and you know, it's been a while, so I feel some frustration brewing from Trump to start stabbing back. Now, we got a few truths from from Donald Trump today, and Elon. We'll talk about both. Elon was wearing thin. I asked him to leave. I took away his EV mandate that forced everyone to buy electric cars that nobody else wanted. That he knew for months that I was going to do, and he just went crazy. Then he said the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's governmental subsidies and contracts. I was always surprised that Biden didn't do it. I don't mind Elon turning against me, but he should have done so months ago. This is one of the greatest bills ever presented to Congress. It's a record cut in expenses, $1.6 trillion in the biggest tax cuts ever given. If this bill doesn't pass, there will be a 68% tax increase, and the thing far worse than that. I didn't create this mess. I'm just here to fix it. This puts our country on a path of greatness. Make America great again. And what Elon really went on to say, I'm so lost in all his tweeting and retweets he did today. He pretty much said that the big ugly bill will increase the deficit by 2.5 trillion. There was another one where he said that he retweeted this one. I have a plan to cut spending, increase spending. There was also another one where he said that Congress is spending America into bankruptcy. And there was even one more I seen where Elon said that, let's see if I could find it real quick, that Trump was in relation to the Epstein files, and he shared this video of him partying with Jeffrey Epstein. But the one that I want to stick to the markets and economic kind of news, because that's what I like following here. The Trump tariffs will cause a recession in the second half of the year. So that's just one more fight Trump's fighting. Let's include, he's been fighting with Biden, taking shots at Biden, investigating him and stuff, back at it again with the Fed, pressuring them to cut rates, and then now let's add Harvard to that. So during Wednesday, he suspended Harvard from participating in the student visa program, prohibiting foreign nationals from attending the university, issuing this on Wednesday. And what this does is it prevents students from receiving visas to study abroad for 6 months or even longer. We'll just see how all that works out. The Secretary of State will be the deciding factor as to whether the foreign nationals that are currently at Harvard are, whether or not their visas will be revoked or not. The reason for this suspension is that the university, according to Trump, doesn't report crime statistics from foreign students and doesn't police these crimes correctly. And this is all according to Trump. And he also goes on to mention that the university receives a ton of funding from China, which could be a problem. Trump wants them to check first. They want to fully vet out these foreign students that they're sending. He blames crime or whatnot, but I'd imagine this goes into his trade negotiations he's currently having with China. But what do you think China will think about this as these trade negotiations go? Trump announced that he had a call with the president of China discussing some intricacies of recently made and agreed to trade deal. The call lasted for about half an hour, and the call was mainly centered around these rare earth metals and trade around them, that those minerals are very important for our tech industries, the auto industry, and Trump's really been getting a lot of pressure in relation to trade regarding this. The combo was described as productive and that both sides agreed to meet soon. The president of China invited Trump and the first lady over to China. Trump invited them over to the US. So it seems pretty well, at least from Trump's point of view. Now, just a quick head on over back to Twitter. Here's a page from China that reported their point of view, and it's completely different. So this news agency had a different spin on the call, noting that the president of China, Xi, I believe is how you say his name. That's why I've just been saying the president, urged Trump to remove the negative measures that have really disrupted the bilateral trade, mainly around these restrictions of chips, selling NVIDIA chips to China, and the discrimination with Harvard, which hasn't necessarily stopped just now. So here's the post. We call on the U.S. to uphold the market principle of fair competition, stop politicizing trade issues, and provide a fair, just, and non-discriminatory environment for Chinese and foreign businesses and other foreign businesses. China will do what is necessary to defend China's businesses' legitimate and lawful rights and interests. So here's another fight that's kind of brewing, and I'd imagine the Harvard stunt banning students from attending that school, one of the best schools to go to in the entire country, better yet, the world. I bet this is going to lead more to the sour taste in China's mouth right now against Trump. Not to mention, Trump picked a fight with 12 plus 7 more other countries, banning citizens of 12 countries from traveling to the US, and 7 other countries with travel restrictions. So the ban will completely bar travel to the US by citizens of Afghanistan. I don't even know how to say some of these. Chad, the Republic of Congo, Haiti, Iran, Libya, Yemen, and some of these other ones. Forgive me for not knowing how to say these. And then citizens from additional lists of countries will be barred from permanently immigrating to the US along with applying for tourist or student visas. Those countries are Cuba, or one of them, Venezuela, and citizens from these 7 countries will still be eligible for other temporary visas such as the H-1B temporary work visa. The ban goes in effect on Monday and applies to people outside of the US. And mainly the reason the administration justified the restrictions are mainly in a number of ways, and you can see that right here on screen if you're actually watching. Several of the countries, it said, had unacceptably high temporary visa overstay rates, so they're staying longer than they need to, necessitating a ban. Never seen that word before. Others, it said, couldn't be relied upon to issue valid passports to verify a person's identity. Haiti, the only country in the Western Hemisphere to face a complete ban, was included because hundreds of thousands of illegal Haitian aliens flooded into the U.S. during the Biden administration, the White House said. So here's more fights Trump's picking up with others out there in the world. So, man, this man's like throwing a punch this way and uppercut this way. And did he give Elon Musk that black eye in the White House? To be determined. Now, we also got more stuff other than Trump. Remember, I'm not a Trump channel. I got to keep on piling this into the videos just so everybody knows, because I like following economic, macroeconomic kind of stuff. So let's get into the economic data we got out today. But all of these factors are driving the markets, and I'd imagine Trump's is the larger weight that is driving the markets. But let's look at this one. So we got some international trade in goods and services trade deficit in the US data. And what we've seen that is in April, it collapsed due to tariffs impacting imports. So something we already knew. The trade deficit narrowed to 61.6 billion, which is its lowest since September of 2023. That 61.6 billion that it came in at was low. So they were expecting it to come in at 63.3 billion, and this was by Wall Street Journal surveys of economists, and it was sharply down from 138.3 billion in March when front running was occurring due to the Liberation Day tariffs surfaced by that hurry up and buy mentality before these tariffs kick in. Now, this drop of 138.3 billion in March to 61.6 billion that we seen in April was a 55% drop and is only second to 1992's record. So this one for sure made records. Now, companies are just sitting on inventories now. They hurried up and buyed, and they got all this inventory and they're just sitting on it. So that's why imports fell. Now, imports on goods and services fell 16%, which is the largest decline on record. Imports on consumer goods fell 32%, largely driven by a drop in pharmaceutical products. Exports of goods and services rose 3%, and this is more so from the hurry up and buy from other countries buying US goods and services before those retaliatory tariffs kicked in. I'd imagine the mess is still going to continue messing. Messes are messing right now, and we're not done. It's all negotiating. Now, we also got some Challenger Gray reports out on job cuts. And what they report is that job cuts in May were just under 94,000, which was a 47% drop increase since last year. Just under 700,000 layoffs have been announced over the first 5 months of the year, which is an 80% increase from the same period in 2024. We just keep on breaking record after record after record. Trump's probably going to break a record for how many people you could fight at once with all them countries, the Fed, Biden, Elon, and everybody else, Democrats. I want to make America great. The key driver of economic growth, which is the services sector, saw the highest job cut in May in 5 years with over 34,000 layoffs announced. Now, year to date, retailers in the private sectors are leading with most of the layoffs, just under 76,000, and next in line would be the tech industry with just under 75,000 layoffs. The report also noted that around 40% of all job cuts this year across all sectors were tied to Doge, Elon and Trump and Ramaswamy cutting jobs to try to make the government more efficient, the Department of Governmental Efficiency. Who knows if that really worked out or not, but like I said, to be determined. Just keep on watching this together. We're learning. We also got some jobless claims out, and initial jobless claims rose to 247,000 in the last 7 days, ended in May 31st. New claims aren't much higher than a year ago, falling in 32 of the 53 states and territories. Now, the number of jobless workers collecting unemployment benefits slightly dropped, coming off of a 4-year high. Around 1.9 million is where they're standing. And this is right as Procter & Gamble announced that they're cutting 7,000 jobs in the non-manufacturing department. And this is over the next 2 years. This is about a 15% drop in the workforce for the non-manufacturing, and they'll be raising prices too due to tariffs. We also had Federal Reserve, Adriana Kuglar of the New York Fed, come out and talk a little bit, because everybody's more so focused on what's happening with the job market. We got job data tomorrow. This, and this. What are layoffs doing? She's trying to kind of take our eyes off of that, and she says that she sees inflation as a larger risk than deteriorating employment conditions, saying that, and this is from her POV, my focus right now is inflation. That would be the first order effect, saying we haven't seen the full extent of the tariff impacts, and leads to her support that the FOMC's current setup for the wait and see probably is still the move right now. She doesn't necessarily see a reason to cut, rather than, hey, let's keep on waiting, let's watch inflation, and especially if we're expecting inflation in these summer months to start surging over the next 90 days, we'll be watching that and see if it's sticky. But right now, we're fine waiting and seeing. And this is right at the same time as BlackRock CEO Larry Fink came out, and he thinks that the biggest thing we're missing here in the United States is the inflationary backdrop. If tariffs are instituted over the next 5 months, I think we're going to see very elevated inflation, Fink said. And this was at the Forbes summit over there in New York. Shout out New York. And Larry Fink thinks that we're due to see elevated inflation. Right now, the data is beginning to weaken, putting the Fed in a tough spot. So we got weakening economic data with inflation expected to be elevated. Sounds like stagflation and sounds like a tough fight for the Fed. So the Fed's fighting multiple battles, Trump's fighting multiple battles, and here we are just reporting it. I think we got the easy job. Now, Realtor.com gave a May 2025 monthly housing market trends report, and what they reveal is that the number of homes for sale rose in May by about 31.5% year over year, so from a year ago. And there are more homes for sale on the market than any time since the pandemic, and they're taking a lot longer to sell, with the median days on market hovering around 51 days. So let's think about this. We got more listings. We got less buyers, mainly due to these elevated interest rates that are following bond yields, and bond yields aren't expecting to plummet anytime soon, especially with all the mess going on. So what does that equal? More listings, less buyers. Common 101 supply and demand economics means slower growing home prices or even declining home prices. And then on top of that, sellers got to compete with these new construction homes that are for sale. And these are brand new homes, right? All for a new home, and they're cutting prices and they could buy down rates. So for a seller right now, ugh, that's tough. Now, as for borrowing costs, what do those really follow? Well, these borrowing costs follow the Fed, and what Miss Kuglar just said is she's fine sitting for a while with these rates where they're at. So that's a problem. Mortgage rates are falling for the first time we've seen in 5 weeks. They'll likely be range bound though for a while, and I wouldn't expect them to continue dropping. Who knows how that happens in the longer term, but at least here in the super short term, I'd imagine we're not going back to 5%. Now, the drop in rates that we've seen lately, like recently, this week recently, was due to Treasury yields going down this week as people really wanted to search for safe haven or park cash in as the uncertainty that we're seeing continues to rise, especially with these stocks being super high and negotiations going on. You just don't know what's going to happen because this uncertainty isn't over with. There are some inflation concerns to consider, which is driving these yields to go up. And mainly these inflation concerns, which distracts people or raises their inflation expectations. And when inflation expectations increase, they want more rewarded for even considering buying these government bonds, right? So we got tariffs and these negotiations going on with these tariffs. We got the national deficit being increased by the big beautiful bill that Elon Musk is complaining that may send the US into a recession. Who knows who's right here, but they all impact bonds. And the US bond market, with roughly 29 trillion of outstanding treasuries, and think of a treasury as an IOU to be paid by the government to whoever's holding the bond, is expected to increase. So they're expecting to increase the supply of bonds. A lot of people's not interested in bonds right now because, hey man, like, we could go buy stocks, or maybe the US is putting tariffs on us and Trump's being a wild card. I don't really want to buy them. For whatever reason, they have to incentivize people to want to buy these bonds, which is why yields increase. And when these yields increase, mortgage rates increase. So that's why these mortgage rates are high. Who would ever thought a boring bond would impact me buying a house, right? Now, higher interest rates impact a few other parties, mainly businesses and consumers. And it's been like that for a while. Now, let's think of a gauge that really measures how businesses are doing. Can we think of one together? I can. Stocks. And what are stocks doing? We see that today was a really mixed day. I mean, we're down during the day, we're up at night. Bitcoin's down quite a bit. Let's see what Tesla's doing with the Trump argument thing going on. Down 14% today. Wow. It's just a wild move. But what we see is that usually when these yields fall, these treasury yields fall, or rise, when these yields increase, stocks are pressured because their projected earnings are worth less when measured against these higher rates. And higher rates are restrictive. It slows down the cost of money, increases, so borrowing money is more expensive than it was, and people are able to borrow less, or even if they're able to borrow at all. Now, throw on top of that tariffs and the tax spending bill that leads to economic expansion and inflation. So despite yields going up, we can possibly see stocks near all-time highs pretty soon. Let's put the SPY back. And I've been talking about this for a little bit just because stocks have kind of been lagging back. Like Bitcoin's hit a new all-time high, and that could be because of the Bitcoin-friendly administration in the White House and all of that other jazz and jargon going on. But stocks could possibly reach an all-time high, and a lot of retail is thinking that as well. But right as retail is continuously buying the dip and they're more bullish on these US equities, we see that hedge funds are increasing their bets against these US markets and are more interested in the foreign markets rather than the US markets that are near these all-time highs. And if you look up in the past, any time where retail's made a decision that's against what funds agree with, who usually wins these fights? The funds. And those are more likely the ones that get bailed out in a disaster too. So it's usually retail always left holding the bag. Now, funds usually win in the end, but retail is getting even more bold, buying the dip despite lingering macro risks. Stocks are doing pretty well though, with the 20% increase since what was that, like April, March or so, April. So stocks are likely to have their weakest annual return since 2022, or what some are forecasting, around the same concerns we've been covering here on this channel each and every single day. None of it seems to really have cleared up. Interest rates are still high, more uncertainty than there was yesterday. Tariff negotiations are still going on, although Trump claims the call with China went pretty well, and then China gets on Twitter and says the complete opposite. Who knows? But retail's bullish and they're buying the dip, and funds are making the opposite decisions. And at the same time, stocks are likely to have their weakest annual return since 2022. So does that justify new record highs if we get there? Because I don't know what's going to happen. But tomorrow's a big day, everybody. We got the job port, so let's look at the median forecast. Tomorrow, we're expecting the U.S. employment report to come in at 125,000 jobs. U.S. unemployment rate to come around 4.2%. Hourly wages up 0.3%. Cool. And then we also got Fed Governor Michelle Bowman's speech, and then consumer credit. Watch this. A lot of people are expecting this jobs report to come in a little weak, especially with some of the previous job data we've seen this week. So keep your eyes on that, and also watch the CME Fed Watch tool. After Fed speak and all of the mess and all the data coming in, we're really watching September 17th for this meeting, and it looks like we've fallen a little bit since last time I've looked. I remember we got as high as like 56 on this, and we were as low as like 48 on this. So keep on watching September. That's when everybody's expecting the first Fed cut. But in the meantime, y'all, we got a lot we covered in today's video. Hope it was valuable to you. I'm going to keep on covering stuff as it comes in, and I hope it's a blast. And if you're watching the thunder, thunder up. Have a good one.